Hi traders, happy Monday and welcome to the first official week of trading for 2026. Wow, it did not take long for the first geopolitical event to hit for 2026. Over the weekend we saw a surprise military action by the US in Venezuela, where they went in with military force and captured Maduro, the president of Venezuela, in the capital Caracas, and his wife, and effectively kidnapped them and brought them back to New York now, where they are going to be tried. The reason why the US gave for what they did is that Maduro was basically involved in what was called narco-terrorism. So a lot of the drugs that are in the US have been flowing in under his watch, and basically Trump said enough's enough. But Venezuela holds 300 billion barrels of crude. Fun fact, it's actually more than Saudi Arabia, so it has the biggest oil reserves in the world. Not only that, is that the grade of those oil reserves is actually some of the better high-grade crude as well. So look, a lot of the world has been asking the same question. Would have Trump gone into Venezuela and taken Maduro if there wasn't so much crude in Venezuela? And I think we all know the answer to that. Anyway, some of the key takeaways that we've learned post this military operation is that the US intends to run Venezuela. So it'll be interesting to see how that plays out. But also Trump was quite open about it, is that US oil companies will be going into Venezuela. We'll be spending a lot of money on infrastructure, trying to get the Venezuelan crude industry back up and running properly, and that they would certainly be taking a lot of that crude. So, he was very open that this is going to happen. So look, what does this all mean for markets? Look, I think we're not going to see any huge moves on the back of what happened on the weekend. One, it did happen when markets were closed. Two, it was very fast. There was no casualties on the US side at least. The other thing is that there was no real disruption or damage done to any of the crude infrastructure or oil fields in Venezuela. But having said that, yes, it is a geopolitical now new issue that is very fluid. One of the things that obviously does like, when we have geopolitical risks is gold. So no doubt, it will put, a new premium or a sort of new floor on gold. So yes, buying dips on gold is probably going to be the way forward. But as far as crude's concerned, I don't think we're going to see any sort of big move in either direction yet. Again, the situation's fluid, and obviously what happens next is just how easy that transfer is for US to take control of the country, and also obviously the reactions from Russia and also China to what is going on. But anyway, look, it's all fresh, and we're still learning about exactly how this is all going to transpire. Okay, so this week, yes, it is the first official week of trading, and we're going to get some top tier economic data come through. The first bit of data that we're going to get that's important is actually here in Australia. We're going to get CPI data, monthly CPI data. So if I take you back to late last year, Aussie CPI actually jumped up from 3.6% to 3.8%, almost back at 4%. So it came out well above expectations, and also the RBA trim mean, which is the one that the RBA really focuses on, also went up to 3.6%. RBA wants inflation within the 2 to 3% band, so it's well above that. So this number is going to be super important. God help us if that number goes up again and we go up even more towards 4%. That's not going to be good. We really need this number to come down in a big way if we're going to take pressure off the RBA. There is no meeting in January. The first meeting for the RBA is the first Tuesday of February. so they are still on summer holidays. That February meeting is 100% a live meeting. So, again, what happens with the CPI? If the CPI doesn't behave itself, I would say that you are going to get a rate hike in the first week of February, so from 3.6% back up to 3.85%. So one of the only central banks in the world hiking rates. So look, the Aussie dollar certainly is going to be a big focus over the CPI. Aussie at the moment was one of the best performing currencies in 2025. We are starting the year around 67 cents. Look, if that number does come out strong, hot, I'd say the Aussie's going to have a quick trip up to about 68 cents, and I'd not be selling the Aussie. And also, obviously, it's not going to be good for the ASX. Anyway, so let's see what happens on Wednesday, but very important day for Australian markets. And then on Friday, we are going to finally get a good read on unemployment post US government shutdowns, etc. when we get the December non-farm payrolls employment data that comes out in the US. The reason why we've been cutting rates in the US, why they did cut 3 times last year, is because unemployment was ratcheting up. Look, we did get a print late last year that went up to 4.6%. Markets really didn't know how to take that number with US government shutdowns, etc. But markets expecting that unemployment rate to go back down to about 4.5%, so marginally lower. Headline around about 50,000 jobs positive. The Fed does meet in late January of this month on the 28th. Market does expect a pause at the moment, regardless of really what happens to this employment number, unless it came out well above expectations. The earliest the market's looking for a live meeting is in the March meeting. But yes, obviously, expectations for what the Fed does next is certainly will hinge and will change on what happens with this number on Friday. So no doubt we're going to see some volatility in the bond market, see some volatility in the currency markets, and obviously precious metals, which have been super volatile of late, and equities. So yes, this week we are kicking off with some decent top tier economic data, some geopolitical risk from the weekend. So there's going to be some action to start this week. Good luck with your trades, and we'll catch back in with you shortly.